So first of all, in the trial balance, illustration number 8 of partnership final account, there are two partners, Radha and Meera, and their profit sharing is given, which is 3 raised to 2, right? So in the trial balance, firstly, we have given capital. As we are not preparing the capital, so this capital is transferred to where? Balance sheet liability side.
Liabilities.
So come to the balance sheet liability side. Write down capital of Radha into inner column 20,000 and of Meera inner column 10,000. Total in the outer column rupees 30,000. Next, current account balance is given. Come to the current account. Radha is having debit balance, so on the debit side write the 1st April 16 to balance brought down in the column of Radha rupees 5,000. Meera is having credit balance, so come to the credit side 1st April 16 by balance brought down in the column of Meera 1,000 rupees. Then purchase we have given. Come to the trading account debit side. Trading account debit side right to purchase. Two adjustment we have. So into inner column 15,000. One line underline, two line underline. Come to the credit side. Write down by sales. Into inner column 32,000. Three adjustment we have. So one line underline, two line underline, and again two line underline. Then receivables and payables we have. So instead of debtor creditor, here receivables and payable is given. So all effect on debtor and creditors would be given on receivables and payable. So come to the balance sheet asset side. Right here receivables. Into bracket you can write down debtors, which is 16,000. So almost around 5 adjustment we have. One line underline, then two line underline, again two line underline, two line underline, and again lastly two line underline. So this how total 5 adjustment we have. This is our receivable, this is our debtors. Now on the liability side we have payables, that is you can say creditors. No adjustment. Right on the outer side, outer column 9,800, right? Then motor car, again come to the asset side, write down motor car, no adjustment. So in the outer column 12,000. Then after we have Goods written. Debit side, as you know, we have sales written. So from sales, less sales written 1000. Total in the inner column will be 31,000. Similarly, on the credit side, we have purchase written. So less purchase written 500. Total will be in the inner column 14,500. Then after we have sundry expense. P&L debit side, write down sundry expense, no adjustment in the outer column, rupees 800. Then provident fund and contribution to provident fund. So credit side we have provident fund. Come to the balance sheet liability side. Write down here provident fund into inner column 4,000 rupees. One line underline, right? Then on the debit side, we have contribution to PF, which is our expense. So comes to the P&L debit side. P&L debit side, write down contribution to PF. Contribution to PF, outer column 200 rupees. Then bank and cash, debit side we have cash balance, credit side we have credit bank overdraft, right? So come to the balance sheet asset side. Balance sheet asset side, write down cash balance in the outer column 2500. And on the liability side, write down bank overdraft. Amount is 19,847. Then after opening stock, come to the trading account debit side to opening stock 9,000 rupees. Then bank interest is our expense. So come to the P&L debit side, write down bank interest in the outer column 142. Then building, which is our asset, come to the asset side, write down building, no adjustment we have. So in the outer column we have 12,950. Then we have stationary stock. So first of all, come to the P&L debit side. P&L debit side, write down to stationary expense. To stationary expense, and prepare one small table. Opening stock plus purchase, after one space less closing stock. So here opening stock of stationery is given, right? So write in the inner column 200, right? Then after Next item is stationery purchase. So purchase is also given. Write down here rupees 1000. Make the total. It will be 1200 rupees, which is in the inner column. Okay. Then after bad date return, this is one kind of your income. So come to the P&L credit side. Bad date return in the outer column 700 rupees. Then sale of old newspaper. This is also one kind of income right here. P&L credit side by sale of old newspaper 1000 rupees. Then professional tax, one kind of expense, write down on the debit side of P&L to professional tax, 800 rupees. Then patent and trademark, it's our asset. Come to the balance sheet asset side, write down patent in the outer column 4000, and then after trademark in the outer column 5000. Then we have carriage inward. Come to the trading account debit side. Carriage inward, which is 200 rupees. Then after discount allowed and received both are given. But as you know that for discount allowed here in this sum you have to prepare small tart table. So come to the P&L debit side. We'll prepare one small tart table. Write down to discount allowed trial balance to DRD adjustment after one line minus DRD trial balance. So from this here we have given discount allowed trial balance right in the inner column rupees 125. Okay. Then after machine of office is given, come to the balance sheet asset side. Write down machine into inner column 8325, right? Then after depreciation on machine is given, and this depreciation is given in trial balance, so we have to look whether adjustment is given or not. So here adjustment is also given for the depreciation on machine. So depreciation which is given in trial balance should be added, right? So add depreciation of trial balance 675. Total comes to the 9000. Then one line underline. Okay, then after depreciation on motor car which is given in trial balance. But if we look at the adjustment, there is no adjustment of depreciation on motor car is given. So this depreciation on motor car is written on P&L debit side. Come to the P&L debit side to depreciation on motor car. You can write it down in the inner column. 2000 rupees. Okay. तीन चार लाइन यहाँ पे छोड़ देना है सो दैट दूसरे डेप्रिसिएशन को भी हम यहाँ पे ऐड कर सकें. Okay, then after freight is given, come to the trading account debit side, right here to freight. In the outer column, write down 350. Then after discount reserve is given, this is a DRD, you can say, of the trial balance. So for that, we already prepared small chart table. So come to the small chart table. This last item is given. Deducting item is given minus DRD trial balance, which is write down in the inner column 250. Right? Then after bad date reserve is given. So for that again we have to prepare big chart table. So let's prepare chart table. Write down to bad date trial balance. Under that plus bad date adjustment. Under that plus bad date reserve adjustment. After one line minus bad debt reserve trial balance. So right now bad debt reserve trial balance is given, last item is given. So right there into inner column 1000 rupees. Then after investment of PF is given. So investment is your asset. Come to the balance sheet asset side. Right here investment of PF, Provident Fund, which is 4,000. Then after interest on Provident Fund investment. So of this investment, interest we are receiving. But PF is, this PF is for employee. So the interest on investment of this PF is also goes in the hands of employed. So this is not our interest, this is not our income, this is employees' income which is in the hands of us, right? So again we are add back to it into the provident fund. So come to the provident fund side on the liability, please add interest on investment of PF, which is given here 240. Total in the outer column 4,240. Then after Kanaiya's loan is given, so write down on the liability side loan of Kanaiya. In the outer column 7,000. Now of this loan, the next item is interest on loan. So interest of this loan is given, right? And this interest is 315. But actually it was different, right? So first of all, write down on the P&L debit side to interest on loan into inner column 350. But if we calculate exact amount of interest of Kanaiya's loan at the rate 9% starting from 1st June, it will comes to the total 525. So we can say 210 is outstanding. So this is hidden adjustment you can say. So please add plus outstanding interest 210. Total in the outer column 525. And the second effect of this outstanding 210 On the liability side, outstanding interest on loan 210. Then after insurance premium is given, come to the P&L debit side to insurance premium in the inner column 600. But again we have here hidden adjustment. Adjustment is given that out of 400, this 400 insurance is ending on 30 June, right? So for 3 months you have paid in advance, which is called prepaid insurance premium, which is 100 rupees. So prepaid, that means first effect less from insurance premium, give the first effect less prepaid insurance premium 100 rupees. So in the outer column we have 500. Second effect of this prepaid insurance premium on the asset side, write down prepaid insurance rupees 100, right? Then after salary and wages is given, come to the P&L debit side to salary and wages. No adjustment in the outer column 3730. Then after furniture is given, so come to the balance sheet asset side, right here furniture. This is most important item as far as this example is concerned. Into inner column 1500. Here we have two adjustments. So one line underline, two line underline. Then dead stock is given on the asset side. Write down dead stock. Dead stock on the outer column 150. And damage. Last item of the trial balance, damage, come to the trading account debit side to damage in the outer column rupees 100, right? So this how we have completed the trial balance. Now starting from the first adjustment, valuation of closing stock is 15,000, right? So in the previous class we have calculated the value of closing stock, and it would be how much? 14,370, right? So please give the two effect of closing stock. First on the credit side, write down by closing stock 14,370. Second effect, balance sheet asset side, closing stock of goods, because we have two kind of stock, closing stock, one of stationary stock and one of, you can say, of goods. So closing stock of goods 14,370. Second adjustment, stationary stock on 31st March 17 is 500. So you can say this is closing stock of stationary. Comes to the P&L debit side first of all, in that small table, opening plus purchase minus closing stock. Right here into inner column 500. 1200 minus 500. So in the outer column we have 700. Second effect of this closing stock on the same side, asset side. So come to the asset side, closing stock of stationery. Right here, closing stock of stationery, 500 rupees. I hope it is clear. Third adjustment, most important adjustment, I would say. I read it out. Furniture of 600 sold to Kisan for 400 on 110, which is recorded in the sales book. First of all, it is recorded in the sales book at obviously sales price, right? So first of all, you have to rectify it, you have to correct it. So let's eliminate this wrong effect. So come to the sales side, that is trading account credit side. Right here, less sale of furniture, or you can write here wrongly recorded 400. So total in the inner column 30,600. This is first effect. And obviously, as it is added in sales, it is also added in our debtors as well. So comes to the balance sheet asset side. From the debtor, please list sale of furniture at sales price, that is 400, right? So two effect is given. This how you can eliminate first the wrong effect. Now add the right one. As we are selling the furniture, if we are buying the furniture, it is added. So when we are selling the furniture, it is less from the asset. So please come to the furniture side. Right here, less sale of furniture, but here you have to take the book value of that selling furniture. And the book value of that sale of furniture is 600. So subtract 600 over here. 1500 minus 600 comes to 900, right? Now this furniture is sale to Kisan and it is sold on credit. So name of person you have to write here, and that Kisan becomes data for us, right? So two options we have: either we can again add back to the datas, or separately you can write the account of Kisan. So again come to the balance sheet asset side. Right here Kisan's account, into bracket furniture sold. But to Kisan, at which price actually we are selling this furniture? It is of having book value 600, but we are selling to Kisan for 400. So right here 400. Right now, four effect we have given. Now before selling this furniture, first you have to calculate what? Depreciation. Then after, you can have a result whether we are incurring profit from this transaction or loss, right? So of this 600, if we put the rate of depreciation, which is given here 5%, and it is sold on 110, right? So from 1st April till 110, you have to calculate what? Depreciation you have to calculate. Please calculate the depreciation. It is how much? Can you tell me? Depreciation on furniture sold. 600 into 5% into from 1st April till 110. So 4, 5, 6, 7, 8, 9 for 6 months.
15.
15 rupees. Very good. So only one effect of this sale of furniture depreciation is given, and it is given on the P&L debit side. So right here, P&L debit side, we have already written the depreciation, right? So right there, furniture sold into inner column 15 rupees. Am I right? So book value is 600 less depreciation 15. So now the cost price of this furniture sold is 585 and it is sold to Kisan for rupees 400. So 185 is our loss. So right on the P&L debit side to loss on sale of furniture. How much? 185. So this how total six effect of this adjustment we are giving. I repeat this effect. First, as it is recorded in sales book, so minus from sale, minus from data. Second, as it is sale of furniture, so minus from sale, and against that data is increased and it is sold on credit. So Kisan's account, or you can add this amount into date. Now, if we calculate the result of this two transaction, first you have to calculate the depreciation, which comes to 15 rupees, and only one effect of this depreciation is given, as it's not an adjustment, right? So the balance, the difference of cost price is now 585 and the selling price is 400. So the difference is 185 is our loss. Sixth effect, P&L debit side loss on sale of furniture. I hope it is clear. Moving further to the fourth adjustment. So in the fourth adjustment, you have given increase in rate of depreciation 10%. So rate of depreciation is given. Come to the machine balance sheet asset side. Machine is given. Total of machine is now 9,000. Less depreciation 10% comes to the 900. In the outer column we have 8100. Second effect of this P&L debit side. So right here under the depreciation on machine 900. Now fifth adjustment, provide 5% depreciation on furniture. So on old, that is furniture sold, depreciation we have already calculated. So only the remaining furniture, on remaining furniture depreciation is left. So total in the opening balance of furniture we have 1500 rupees. Throughout the year 600 sold. So how much would be the remaining balance? 900. On that, please calculate the depreciation. So less depreciation 5%, 900, 5%, 45 rupees. Second effect, 855. And the second effect of this on P&L debit side.